One of the great markers of out of control, irrational market froth during the pandemic was when legions of day traders began snapping up shares of Hertz in the aftermath of its bankruptcy filing. That filing came 4 years ago yesterday, May 23, 2020, when the car rental company asked the judge for protection from creditors amid sweeping COVID travel restrictions that destroyed demand and left it holding the bag financially, since Hertz owned a large portion of its fleet outright instead of acquiring cars through buyback agreements with manufacturers. That combo led to a stunning fall from grace for the century-old company. But as we know now, that was far from the end of the story. While the shares of companies that file for bankruptcy reorganization usually sell off in anticipation that equity investors would be wiped out, something curious began to happen with Hertz. Traders piled into the stock with the belief that Hertz would not only survive, but that shareholder value of some sort would be preserved. It was a bizarre gamble, and it turned out to be an incredibly smart one. The stock price, which had plunged from more than $20 a share in February 2020 to 56 cents the first trading day after the filing began, to rebound immediately, tripling in barely a week. Daily trading volumes, they were more than 20 times historical averages, and while the share price did remain mired below $2 a share for months, that rocket ship really began to take off in May 2021. That was when Hertz struck a deal with Knighthead Capital and Certeris Management to buy the company out of Chapter 11. Now, it was a deal that gave the reorganized Hertz an enterprise value of more than $7 billion and gave stockholders a recovery of about $8 a share. And they nailed it. They really did. Bloomberg data showed that every single one of those equity holders paid no more than $6.25 for a stock that even Hertz had said at the time would be worthless. By July 2021, the stock resumed trading over the counter as a new issue, opening at $22 a share. By November, the stock moved to the main NASDAQ Global Select Market under the new ticker HTZ, again, a new issue, with local Florida pitchman Tom Brady tweeting, "To the moon." And the share price, that's exactly where it went, headed up to a peak of $35 a share. Now, to be sure, things aren't perfect at Hertz. It got embroiled in a bad press a couple years ago over those wrongful arrests of some of its customers. Sales still haven't yet returned to pre-pandemic levels, and it made a huge misstep in agreeing to buy those 100,000 Tesla EVs. But despite all of that, you add it all up together, and the Hertz post-bankruptcy story is still one of the most remarkable rebounds in recent market history.